All right, good morning. It is September 20th, and let's do some pre-market prep here. So, can't go live this morning. I am still on Drive the Fiancé to work duty, but hopefully we're getting that freaking car back tomorrow. So jumping in here, y'all, it is about just shy of 7 a.m., so a little more than 2.5 hours here before the market opens, and the futures are down a bit here. So S&P 500 is down about 1.3%, and the Qs are down 1%. The Dow Jones is down 1.5%, and the small caps are down almost 2%. So a pretty good thumping here across the board. And remember what we talked about last week. Right, here's your most important chart in the market is the volatility index. So this market, really looking at the market over the last year, has kind of bred this mentality that you have to buy every dip. And don't get me wrong, if the uptrend continues and the bullish structure of the market remains, you do look to buy these dips here. And quite frankly, I'm still looking to buy the dip. But one of the most important rules is you don't buy that dip until the volatility index fades back down. So you get your flush in the market, you get your spike in VIX, VIX rolls over, market continues, you get your flush, VIX spikes, VIX rolls over, market continues. So really, for anybody buying the dip here last week, you didn't have that confirmation. So I do think an important lesson. VIX just kind of continued to sit here on the 21. Thursday is trying to go for it. You get a nice pump here on Friday, and then obviously this morning, big gap up. So keep that in mind if you're a newer trader. Even in the most bullish of markets, before the market can kind of find a bottom and resume that trend towards the upside, you need volatility to throw in the towel. So, we're down here this morning at -2 ATR, and if you look at the last year or so, this is typically the worst that it gets. You flush to -2, back to the upside, flush to -2, flush to -2, -2, -2, -2, -2. So here we are again. So, last year or so, this is typically the ugliest it gets. S&P comes down here towards -2 ATR. And from a weekly charts perspective, we haven't hit the weekly 21 in well over a year. So that is a key level of support here. Now, I'm not looking to buy the dip this morning. I'm not looking to take any action. Only open position here in the mastery is Home Depot. And this looks beautiful. Reality is, though, market keeps going lower, down goes Home Depot. So we got some Home Depot in the mastery, and then I have some Tesla here by myself. And quite frankly, I'd love a dip in Tesla. But here's my thought process. If we just study the chart of the volatility index, be patient this morning. One reason I think potentially we could put in a bottom today is the VIX is all the way up here at +3 ATR. So just again, studying the last year or so of this trend, for the S&P 500, typically the worst it gets is a flush to about -3 ATR. Where we find ourselves this morning, and for the volatility index, more often than not, the ugliest it gets is a rip through +3 ATR, and then it dies back down. And you get this big rip here in January to +3 ATR, dies back down. You can check out May, VIX rips to +3, dies back down. July, you get the +3. August, you get the +3. And here we go this morning at +3 ATR. So, a few different perspectives here. One, the market has got, call it its typical flush here, just based on the characteristics of this trend. And the VIX is up here at +3, so there is definitely the potential that you be patient this morning, but you start to get VIX coming in. It could be the end of the selling pressure, and it's not so much that you want to go looking to put cash to work today, but slowly but surely, if the VIX does begin to retreat here, you are looking for the market to put in a bottom. Vice versa, the VIX continues to climb, down goes the market. So, we're not in that environment here where we even got to talk about a Tesla. The setup here in NVIDIA, the setup in Facebook, the setup in Google, none of this matters right now. These are all going to continue to go lower and lower if there continues to be selling pressure on the market. And realistically, what's going to continue to cause selling pressure here on the market is a further increase in volatility. So just to focus on a few key things here heading into today's session. We're extended to the downside. Now, extended to the downside does not mean you have to bounce, but just trying to put things together here. We've gotten what's typical of this market, a flush to -2 ATR. And VIX is up here at +3 ATR, where typically it could peak out. So Here's the most important chart in the entire market right now, is the volatility index. This begins to flush, maybe not today, but remainder of the week, looking to put some cash to work to the upside. This continues to pump, still want to be patient. So I'm not even going to go through the Amazons, the Googles, the Teslas, etc. of the world. None of that matters right now. You can find the best looking structure, best looking trend in the market. You can find that picture perfect setup just stacked with bullish momentum. Doesn't matter right now. Really tough to make headway going long when the whole market has some pressure on it. So be patient here. Focus on that volatility index. And really just in terms of the structure of the market, let's take a look one more time at that daily chart. You know, back above the 50 here, just to kind of pick a level. Back above the 50, VIX dying down. I think we're looking to get long and play the next move towards the upside. Until all of that comes together, practice some patience, have some discipline, and just have the realization that if in fact the market does bottom out somewhere down here, and in fact we do begin to turn that corner towards the upside, you've got plenty of time to take advantage of that. The S&P 500 is very unlikely to move back into brand new all-time highs today. Same thing for the Qs. So if the trend does continue, I think we got plenty of time here to pick our spots wisely. So practice some patience. I look forward to seeing you all tomorrow morning. We'll do a live prep. My fiance doesn't have work, so even if the car is not back, we'll be in good shape. But that's what I got for you this morning. For those of you in the Compound Growth Mastery, same game plan. We're not looking to get long here. We're not buying any dips until volatility dies down. So again, I do think there is potential that, granted, while things look a little bit ugly this morning, this could be the end of it if and only if VIX starts coming back down. So your eyes should basically be glued to that chart here today, and you take it from there. So buying the dip in an uptrending market, that's a great game plan. But it's a game plan that can, you can get your ass handed to you, so to say, if you don't wait for that confirmation from volatility yet. So if you're buying that dip last week, you're not getting that confirmation from VIX. Never rolled over, and I never got back under the 21, just kept lingering here, and we're seeing the result this morning. So that's what I got for you. I appreciate y'all being subscribers, appreciate you being here, and I look forward to talking a little bit more with you all tomorrow morning for some live prep at 8:45 a.m. Eastern. So have a good day, be patient, I'll talk to you soon.